But let's move on now. There's so much happening in this digital fintech space. Digital is clearly the way to go, and companies are adopting to new technologies. Cholamandalam Finance is the stock on our radar. Now, Cholamandalam Investment has announced tie-ups with 3 fintech companies. That's Bank Bazaar, Credit Bee and Paytail, and they are forming 3 new business divisions to offer loans. That's consumer loans, small enterprise loans, secured businesses. So the channel through which they are catering to customers is changing and rapidly evolving. Let's find out more about that. We have Arulselvan, the President and CFO of Cholamandalam Investment, who joins us now. Arulselvan, thanks so much for joining us and Happy New Year to you. I want to first start by, what this tie-up with fintech companies really means for you in terms of a bigger reach, a bigger opportunity in terms of earnings, more distribution perhaps. If you can just take us through the rationale and these new divisions that you're planning to create, the new segments, what would this bring to the table for you over the next 1 to 2 years?
Be aware that we have been growing well in the vehicle finance, home loans, and loan against property businesses, and I would say we are one among the large players in this sectors. What we intend to do is to widen the base to look at customer acquisition, and this we feel is a mechanism by which we can acquire more customers to get into other parts of the lending portfolios, which is like consumer loans, the small enterprise loans. So our experience in the lab and HL has given us the strength and the underwriting capabilities to look at these sort of enterprises for valuing their earning potential. So that helps us to tap into these segments, and assistance or the collaboration with the fintechs would help us reach out to them quite fast, and that would give us the quick reach, while our capabilities on the collection front on a physical mode with around 1,150 branches plus in across the country would make sure that what is lent is collected back without any fail.
So basically customer acquisition at a lower cost, sir. That's basically what you're telling us.
Yes, and that, it's more like a phygital mode. That is, we tap the digital and we are there physically available, so that, today when many of the fintechs are facing the collection issues, we want to overcome that, and that's where the fintechs also see the right opportunity to collaborate with us to get this thing going.
Okay. I also want to understand if you will be making any acquisitions. Will you acquire the books of any company? And if yes, what kind of growth would you be looking at? If you can just give us some ballpark numbers of what growth could look like in FY23?
We don't give any forward-looking statements, so I would request that will not be, I will not be able to answer that. While as you also know, that we don't scale up quite aggressively in any of the new businesses we venture into. It will be a steady growth. Yes, we will scale up, and we have plans of growth in these segments, but right now I'm not able to share these numbers. With regard to the acquisitions, we won't be acquiring a loan book, if that's what is your question. However, we are keen, and we have already shared with you that we have acquired a stake in one of the fintechs, which is into the POS machine distribution, the largest POS machine distribution, company in this space. So we again, you would be tapping that to reach out to customers, offering them different products, digital products. They are quite conversant, and they have products up their sleeve on this. So that would help us to get customers and satisfy them and make them sticky, so that we provide the customers all-round facilities from a lending perspective.
But if you are, and I'm not asking you for numbers, but I'm saying that since you are heavily into expanding your product suite, you're going to cater to more customers, right? Not just from the traditional lending into commercial vehicles. Now you're perhaps expanding into more personal loans, retail, etc., MSMEs. That would mean more business eventually for you. I was looking at the numbers. I think in the last quarter gone by, you did a 35% year-on-year growth in your disbursals. That's quite remarkable. So for perhaps for FY23, given that you have so many of these new products, what kind of sustainable growth can one expect?
Coming year is going to be a very good year from disbursements. I also want to let you know that at least in the next 1 or 2 years, the priority and the share of our traditional businesses will continue to be large. Because they are already large and they will continue to be large. And on the other hand, the new businesses, we will be scaling up on a very measured note. Like we wouldn't want to aggressively grow these books. These are unsecured segments, but some of them are. So we would want to look at them in a very careful and we will test these orders and then we will grow them progressively. So in the first, or in the, let's say in FY23 and FY24, these segments will grow. I mean, because the base is low, the growth percentages may look very large, but as a share of the total AUM, they will still be a smaller proportion as compared to our traditional business.
And the lending to in these new areas for you will be through these fintechs?
The sourcing will be through the fintechs.
Through the fintechs.
The
All of this. Yeah, of course.
It's a combination. Yeah, it's a combination.
Is there? So you said you'll be careful since most of these segments are unsecured, and the asset quality risk will sit on Chola's books. So how will you ensure things?
Different ways of collaboration. There are somewhere the overall gain of the business is shared, or it's also on sort of commission basis like a DSA approach. See, our purpose is to make sure we can reach out to a large sector of the customer profile, more in the SME space, which is where we are focusing on, and so that would help us. And through the SMEs, reach out the ultimate consumers also. So that would help the SMEs becoming stickier with us because they have a large and a continuing, funding requirement, which would help us to sort of continue our relationship with them and grow with them and help them grow too. That's our game plan.
Okay, one final question on the traditional business and how it's shaping up. In the commercial vehicle space, we have seen some amount of traction, but there is this whole semiconductor shortage that's taking place globally. Other spaces that perhaps you were looking to enter into, like two-wheelers, are undergoing a lot of pressure. Do you think there could be some asset quality stress in the first half of FY23? And if yes, can you just help us through what the trend could look like and where you're still seeing pressure pockets?
No, I think that is not true. We expect asset quality to progressively improve. It became a little bit stressed post the Q1 of FY22 when there were a lot of large scale shutdowns, etc. But then progressively it has been improving, and as we talk today, assuming Omicron and the new wave 3 is not so severe as it is as the COVID-2, etc., then I see asset quality is improving. There's a lot of traction in the earning potential of our customers, so they will be having enough funds to pay back and start growing. But yeah, disbursement had been a little slow on many counts. Uncertainty on the Omicron trend leading to people wanting to postpone purchase decisions, and also the semiconductor issues, which has created some amount of supply side shortfalls. But I think that has also helped in the used business growing up, and we have been able to capitalize on that because we are also in that space. And so As an organization, we will continue to clock decent growth. And that's what our expectation is.
All right. Good luck with your tie-ups. Good luck with the new businesses. It's always a pleasure, sir. Thank you very much for joining us with that perspective and outlook as well. I mean, the market is firmly lower, but it is bouncing around a little bit. I mean, 30, 40 points off the lows is what we have on the Nifty. We're down